Beautiful. Well, thanks so much for you guys spending some time with me. We'll go through. I'll try to keep it at a half hour. I have a tendency to be a little long-winded, but we'll keep it at a half hour. I'll answer some questions afterwards, and then we'll kind of, and we'll go from there. Okay, so the first thing, our offering and some of the stuff that we're doing is, well, number one, it's absolutely amazing, I think, and I think a lot of other people that have come before you guys have shared those same sentiments. But it's a lot. It's a lot as well. We have a very in-depth package that we offer as it relates to the LOS, the CRM, the Salesforce. We do leads, we do coaching. So there is a presentation that we've done and that we have recorded, right? So a lot of the details about what the company offers as it relates to, systems, leads, all that good stuff is in that recording. And we're going to share that with you guys. But today on the live call, what I really want to focus on is the company commission cap, because this is something unique and I want to have to spend some time explaining it to you guys, okay? So this relates to how you guys earn money, how you set your margins and whatnot. And then also the rev share, okay? So we're going to jump into those two things. We'll spend the majority of our half hour talking about those items, and I think you guys will be excited. All right, so let's get this party started. Now I just want to make sure that this is catching up. Okay, so just really quickly, what we'll talk about is the company commission cap. You guys you've heard of commission caps before, but they're normally associated with how much money you can make on a given loan. So once a loan amount goes too high, if you will, and the percentage of your compensation makes it to where those dollars amounts exceed the cap, then you're kind of cut off there. A lot of them are like 15,000 cap, 10,000 cap per loan. This is different. This is not a loan officer cap. This is a company cap. This is a corporate cap. And what we're capping is our margin. So we're putting a cap on ourselves. Okay, so just want to make sure that's extremely clear. We're going to go through and talk about how doing that makes it to where you have some pretty competitive rates. Talk about the rev share. There are some fees associated with this program. There's an opportunity to grow from a recruitment perspective. And then we also recognize and categorize people who have been doing a great job within the platform. And that's where we have the premier statuses. So we'll kind of talk about that too. Okay, so let's dive into what I'm talking about with this company cap thing. The best way to start this off is with an example, okay? So let's say we have a loan officer that closes $5 million a year, okay? The company margin is something that you almost never see. You do not know how much money is related to the rates that bank is, or the lender, broker, is making on their end. You just sell the rate and you know what your compensation plan is per your contract. So your contract might be at 1%, 2%. That's not what we're talking about here. Your contract can be at whatever you want your contract to be with us. You decide what your compensation is going to be. What I'm referring to is the company margin. Okay, so in this particular example, the loan officer closes $5 million a year. The company margin, in many cases, when you look at some of these retailers, you're looking at New American, you're looking at Loan Depot, you're looking at some of these other companies out there, they'll have as much as 2 points baked in the back end, okay? So it could be anywhere from 1 to 2%. Again, you don't see this, you just use the rate engine and sell the rates, okay? Here at Client Direct, we're exposing this a bit. So you're gonna know what the corporate margin is. That's a big difference, okay? So at these other places, if you close $5 million a year, the company is making $100,000 on you. Again, you don't realize this, but this is the money that's going into the company's coffers. So sometimes when you guys say, oh, my rates are a little bit high, that means that they got the margins pushed up, okay? That's what's going on. The only way you know is by the rates. And it's hard if you don't have another reference point to be able to compare to. Because a lot of times you have your rates, but you don't have a lot of other companies' rates to kind of see where that company's margin might be. That's the only way you can dissect it or reverse engineer it, if you will. Okay, let's talk about Client Direct. We are coming out here telling you from the gate, we are going to take a maximum of $20,000 annually from you. So with this same loan officer that sold $5 million and was working at this other lender where it was a 2-point margin, they would have taken an additional $80,000 home in commission for themselves. Okay, same amount of production, same $5 million. Why? Because we are capped. We're showing you, we're exposing like what goes on kind of behind the door or behind the curtain. So that's what we mean when we say that there is a company commission cap. Okay, why does this make sense? Like, okay, well, Ramon, this sounds great, but also sounds kind of ludicrous a little bit, like maybe a little bit too good to believe, maybe a race to the bottom. Like, what is going on here? Like, why are you doing this and no other lender is? Number one, I've been working on this for like the last couple of years. I've seen this as a weakness in the market. It's too many, all the lenders kind of use the same method or the same sort of strategy, right? Bake all this margin into the back for them. Loan officers never know what it truly is. They get out there and sell it, and they can play this whole capital markets game. If your company has a capital markets, they're in there playing around with the margins, right? Trying to maximize the revenue for the company. That's the whole idea. That's what lending is with these loan companies. Maximize revenue for the company, okay? That is counter to what you would want as a loan officer, or it's counter to what you being able to maximize your commission, if you will. So just do the math. We built the system. We built Salesforce. We use Meridian Link. We have enterprise level systems, okay? If I were to get 1,000 loan officers at 20K a piece, I'm taking from them. 1,000 times 20K is what? That's $20 million. Okay. I'm not doing this for free, right? I'm not doing this. I'm here to play the long game. I'm not going to sit here and try to take as much commission as I can from every single LO. What I'm going to do is try to put as much commission in their hands in an effort to try to get them to come over and work with us, which I consider a better way. And then once I get to a certain level, then I get taken care of as well. So just being, this right here, this idea, this company, the strategy that we took, it's about being transparent. It's about everybody knowing where we are, if you will, what position we're playing, and it's got to be equitable for everybody. Okay, so what's the effect of this? Let's just kind of move down the road a little bit, because now you essentially almost become the owner in us, because you control the margin. That's what it's all about. At the end of the day, lending is about margin. Okay, if you control the margin, and once you get through your $20,000, if you will, that you owe, that you give to that the company takes, then you're at raw rates. And if you're at raw rates, these are the kind of rates that we're looking at. Okay, Andre, I think this one was done the other day. I don't think we updated it for today, but the bond market hasn't changed very much, so we're pretty close. This is just a conventional scenario. So you decide what your margin is going, what your compensation is going to be, and this is the baseline rates that you're selling from. So if you said, hey, I'm going to set my margin, or I'm going to set my compensation, rather, my commission at 1% on this $400,000 deal, then at 6.25, you'd be at par, basically, right? You can't change your compensation on every deal. Can't do that. There's LO comp rules. You can change it quarterly, though, all right? So the FHA rates, the VA rates, we have those are super competitive as well. We don't have them all in here, but that's something we can do one-on-one. If you decide, hey, this is interesting to me, you want to run some scenarios, kind of see where your margins are versus what the raw rates that we're suggesting, let's do it. Let's do the Pepsi challenge. Let's compare the two. That way you can have an idea of what you're doing. Because once you have control of this, now you're thinking from a perspective of how do I want to run my business model? How do I want, because each one of you are entrepreneurs, and I respect that. You got to understand too, like I'm not like your conventional president and CEO. I was a loan originator, right, for these last 10 years, and made it to probably the top of the pile of production or whatnot. And in 2017, I think 18 was my highest year, doing about 250 million. For the last 2.5 years, I've been building this platform, what I consider the best platform in mortgage, right? So that's where I've dedicated my time to. But listen, I mean, if you look at the whole span of the year, I think my overall production, and these are loans that I actually closed, and it's 8 years or so, but it's around $800-900 million. Okay, so I understand and can empathize with exactly what you guys deal with on a day-to-day basis in this business. I want to be honest with you. I have an IT background as well, right? So I worked in, a lot of crossover skills. I worked in finance. I'm not gonna give you the whole history, but I worked in finance. I worked in IT. When I got into mortgage, I used a lot of those skills to be able to like propel myself. I didn't know what a GFE is, a GFE or 1003. That's what it was when I got in 2012. It wasn't LE and CD. It was GFE and whatever else I said. But anyway. I use those crossover skills to kind of like focus in and use a number of systems. I bought leads and I started to get this upward trajectory. But I'd be remiss not to say the truth of the matter is the reason I won so much business is because I controlled my own margin. I came in as a broker and I set my company comp. I didn't work for anybody. I taught myself this business. I didn't work in retail beforehand, right? I had a real estate broker's license. In California, you can transition and get an NMLS. So I did that and I started a company and I started to teach myself about this business. And I set my margins really low. And I started then to get business. This is 2012, 13, okay? Started to get business. Then after I started to earn business, I earned a higher margins where I told myself. Instead of being at 1%, I put myself to 1.25. Then I put myself to 1.5. And at the same time, my business is going up because I'm getting more referrals now, right? I'm getting more realtor partners. But initially, I secured those people by having the most competitive rate. Now, I know rate's not everything. Like I've been in this business long enough to know that service is very important as well. You got to be able to deliver. But we are back in a market where rate has become very important. And you need control of it to be able to win, okay? And that's the, if you want to talk about the root, like why does a person, our experiences are what makes us, okay? My experience is are that I was extremely successful as an individual loan officer with 3 or 4 or 5 people with me, okay? But that molded me into the individual that I am. And a big part of who I am is bringing the most competitive rates without sacrificing service. I never sacrifice service, not at all, right? But at the same time, I put myself in a position, I put myself with a company that allowed me to have control. And that right there is what a lot of loan officers don't have. I saw a loan officer the other day, they dropped their commission of 75 basis points. And I looked at their pricing and it was still challenging. You know why? Because the company they work for was taking 2 points. So they weren't really at 75 basis points over the bottom. They were at 2.75 off the bottom. And at the end of the day, the consumer is going to compare over. They're going to shop over here and shop over there. They're going to find that 2.7 that you're putting 2.75. The LO didn't know that. They thought that. So that's the game that's played, right? And it's played with each and every loan officer at the majority of these companies, to be honest. It's the structure. I'm not saying people are good or are bad. That's not my position to say. A business model is a business model. I respect everybody's business model. If it works for them, it works for them. But when I come out with my experience, with my background in IT, we built Salesforce in the end and dedicated a lot of time, resources, and money to make it to where you guys can come over here. You will not lose anything in systems and support. We do pre-approvals for you. We have the underwriters. You will not, you might say this is better than where you were at, right? As far as platform is concerned and support. But what I understand, you have to, I don't want you out there fighting, trying to win this game, and then you lose the deal because you would have gotten the deal, the person liked you, but you lose the deal because you're not competitive enough on the rate side of things. That's the reason we have cap out. That's the reason I've structured this in a way that it could be equitable for both of us, for all of us on this platform. Okay. All right. So that gives you an idea there. I think I got ahead of myself a little bit. Sometimes I get excited, but I did explain this. If your compensation was at 1, you're taking it off that part. So we'll kind of skip this slide. Now that I've explained the cap out portion of this, let's move into another element that I brought into the company. All right, revenue sharing. We're bankers, okay? We broker, absolutely 100%. We broker. I've been a broker I started out a broker. So I love brokering and all that sort of thing. But I also think there's a lot of benefits to being a banker, as far as control, We do our own disclosures, we do our own fundings. You broker when you need to. There's like non-QM out there. There's a big component of non-QM out there that is going to increase your revenue, right? Quicken doesn't even do non-QM. It's a whole, so there's a whole field out there that you can really, if you have access to all the products, you can generate, a good number of deals. Okay. But banking is important too. And the banking is connected to this whole RevShare piece. Okay. Basically, I feel as though we have one of the most innovative compensation packages now that the industry has seen since I've been in it. Brokering is cool. Like becoming a broker, starting that, it takes a lot. You have to do call reports and all that sort of thing. So and we're starting to see that transition and people go over to brokering again, but that's not for every loan officer. I think that we brought the innovation where we give you the benefits of almost what it's like to be a broker, as far as control of price and all that sort of thing, but we've done it on a banking platform. So it's the best of all worlds. So a loan officer can easily transition over to us that was already in retail. It's not easy for a retail loan officer to transition into being a broker or starting a brokerage or whatnot. And you know what? I don't think they need to now that we've presented something like this. But the benefit here, the cap out is the major benefit and the thing that will attract these people to us, right? Or to the company. And when I say to us, because you're going to participate in the revenue as well, sharing, right? As far as the recruitment is concerned. So the number one reason that people are going to come over to this company, to be perfectly honest with you, the number one reason is going to be because of the money. It's going to be the money first. Then after that, they're going to look at the support, the systems, and everything else they get, and they're going to say, yeah, that's good value. It's going to be easy for individuals to come into this platform. And for that reason, what I want everyone to do is help spread the word. Spread the word, spread the love, right? Part of me being a banker, okay, let me back up a little bit. I told you guys I was a top originator, right? I think in 2017, I was number one in refinancing the country. I've done certain years, 250, 260 million. Reason I tell you that is because I made relationships with a lot of these bigger banks, investors. I know Matt Ishby is a friend, right? He's the CEO of UWM. I sat on their advisory board 2014, 15, 16, 17, I was one of 15 companies throughout the country that sat on the advisory board and constantly gave them ideas of how to get better, what we saw on the streets, if you will, right? So I have a lot of goodwill with a lot of these companies. I told them years ago about this project that I was doing. And I asked them, I said, listen, when we start to get the high number of LOs we in, I need one thing from you. I need an incentive. I need 25 basis point incentive from you. So it's a volume incentive. So a lot of times, like I said, transparency. So I'm going to teach you guys everything I know about this business. We're a bank, but there's bigger banks that we sell to. The bigger banks that we sell to, of course, they're competing too for our business. So what I tell them is, I will give you a certain amount of value, but I need 25 basis points back. And they do it, right? It's an incentivized sort of reason to give them business. What I do with that 25 basis points is I make it part of our rev share. So if one of you bring an LO in, then that LO is going to be underneath you. And you can follow this little visual here, okay? And this is, some of you know this already. This is traditional multi-level marketing. It's not doing it with any vitamins. It's not doing it with anything that I don't, I'm not a big fan of. I've never been a big fan of MLM, but for mortgage, it works well. I will say that. The company that we're closest to, I would probably say, if you're looking at companies that are out there, there's not a company in the mortgage side that is like our company, okay? You'll see other companies like maybe Edge, Next to talk about this, but they're brokers and they're robbing Peter to pay Paul. You can only max out at 2.75 comp as a broker. You can't have any holdbacks, any incentives. You can't give that to the loan officers. You're maxed out at 2.75 no matter what. That's not the case with a banker. With a banker, they can give me an incentive. I can take that money and I can do what I want with it. A lot of companies out there get incentives from these banks and they take it and they pocket it, right? I'm not doing that. I'm putting it towards the recruitment structure of what I want to happen with this company. Like I said, I'm trying to get to a high number of LOs. How am I going to get to a high number of LOs? I'm going to have LOs promote, right? Promote what it is that the cap out. This is a great place. We have a great platform. They have Salesforce. They give us leads. They do this. They do my pre-approvals for me. They're great. They're awesome, right? Come on over and work with us. Not from a standpoint, I don't want you guys to be like, crazy recruitment sort of people. You don't have to recruit here. It's not a necessity or a requirement. I'm simply saying I think that our platform gives so much to the LO. It's going to be easy for individuals when they have their casual discussions to talk about coming over. If that's the case, then you guys are going to be compensated for doing that. So let's just run through this really quick. So let's just say it's me and I bring somebody in, okay? So that would be tier 1, right? Now, if they bring somebody in, that's tier 2. So you see that exponential growth here, okay? Now, if they bring somebody in, that's tier 3. So this kind of shows a picture of if everybody brought in just 5 people. So just 5 people, okay? That equals a total of 155 people. If each one of these people do $2 million a year in business, that's pretty low. $2 million is pretty low, but that's where our cap is, 1% at $2 million. Each of these people do $2 million a year. What's going to happen is 10 basis points is going to be passed up to the original person, okay? So it goes 10, 10, 5, okay? That's how it works. And so if people are closing out loans, you're getting paid. Ultimately, with this example, this would bring you $185,000 extra money a year, okay? For a simple example, we had somebody close a loan the other day, right? It was a $540,000 cash out loan, okay? Their comp is at 2 points. They have it pretty high, okay? So they made $10,000 on the deal, all right? So $10,000 on the deal to the loan officer, okay? Now, we had a margin of 1% in there. So the client got charged a total of 3 points on the deal, okay? 3 points total is with it. It was between lender credit and points. It wasn't 3 points fees to the borrower. It wasn't 3 points on their LE. I think they picked a rate where there was like 1.5 points on the back end, right? So 1.5 points on the back end, and 1.5 points that the client paid, but a total of 3 points paid on that loan, 3 points revenue. 2 points went to the loan officer. They made their 10,000, whatever it was. 1 point came to the company. I made $5,000. Okay, that person's annual cap now, because they're new to the company. That person's annual cap, they have 15,000 left. So they will only need to pay me $15,000 more before they take the whole 3%. So I hope that makes sense. So now you see they get the margin as well, right? That's what I'm trying to tell you guys. So you can do what you want with it. You might say, you know what, Ramon? I'm good at 2 points. Why don't you set my comp lower? Make me 2 points off the rate sheet. Since you're out of the picture now, just make me more competitive on rates, right? Or you might say, I want to take the whole 3. That's what I mean when I say you're a business now, right? You have to decide what you want to. If somebody is brand new, I have another lady that's brand new. I told her, you know what, you might want to slam it all the way down to 1. You might want to slam it. Get out there, tell them you'll be the most competitive. Explain to them this whole thing that we're doing, and go out there and try to really earn some business. That's just where you're at. You're new. You know what I mean? You're gonna have to fight and beat some people in order to get the business, right? So and she was like, she agreed 100%. She was like, all right, Ramon, because I was at 2 points and I couldn't get a deal. And I was like, yeah, you're really trying to sell 4 points at the other lender. You're never going to get a deal. It was like, not unless it's your cousin, right? So that's basically the power that you have. But let me finish. So we got it. We're at 15,000 left. She's going to hit that pretty soon because she has another she has another loan in process, a $600,000 loan. So she's going to get through that probably in the next 60 days or so. All right, let's talk about the people that brought her in. There were two groups that are 2 individuals above her. So the person above her that referred her in got $540. They got 10 bips. Okay. And then the person that brought that person in, so ABC. So let's call the lady that did the loan C, loan officer C. Loan officer B was the one that referred her. So they got 10 bips. That 10 bips came from my incentive that I negotiated with the lenders on the bank loan, right? It didn't come out of the compensation that went to the loan officer that closed the deal. Okay. So, and then loan officer A that brought in loan officer B got 10 bips as well. So they both got a check for 500. That worked. So and I still made my $5,000. I made my 1 point at the company level. The extra quarter was an incentive that was baked into my rate sheet. That's how we paid this up and down line, right? Now, in this particular case, I brought in loan officer A, right? There wasn't another person above. If there was another person above, they would have got, was it $250 or $260? They would have got 5 bips, right? Because it goes down 3 levels. But in this case, that 5 bips went back to the company. The $260 went back to the company because there was only 2 levels down on this particular scenario. Now, okay, I know it's like a math. You're like, all right, I'm following. Maybe you're following me. Maybe you're not. Here's the important thing. We are probably 3 weeks away from building out a platform that shows all of this with your login. So it'll show you at the top, and then it'll show all the people and have all their faces. It's going to look just like this, right? And you'll log in, you'll see your people. When they close a loan, you'll see that they closed the loan. You'll also see the money that you're owed, that you earned off of it, goes into your wallet. Everybody has a wallet. And then at some point, whenever you accrue the money, and then at some point you just hit the button called payout. And then that will put money into your account. Very simple. So I know this might sound a little bit complicated, but once you get the visual, you get into the system. There's a website, there's an app for it, so you can have it on your phone. We are going all the way on this stuff. This is going to be I'm a tech guy. I'm a tech guy, but I've also mastered I hit the pin. I would say I'm in the top 1%. I was able to hit the pinnacle in mortgage, right? And I had the same personality and tenacity going over here on the tech side, right? And I have friends. I'm from the Bay Area, and I have friends that are within the business and all that sort of stuff too. So I do have a lot of resources. Some things have kind of aligned themselves for me to be able to do this, right? And really, I think if you look at my core, I've always been a person that kind of, at least in the mortgage industry, by doing right by people and trying to give them the most value that I possibly could, I've really won from having that sort of like mindset, right? And that's been the experience. I'm just trying to do the absolute best that I can for everyone, bring them the most value, and the return has been sensational. I know it's kind of cliche-ish, but this last 10 years has really showed me, like, I let out and tried to give like the absolute best pricing, service, impeccable service. 9 o'clock, 10 o'clock, 11 o'clock at night, you can call me, right? As far as like, night shift people, yep, no problem. Let's get your stuff taken care of, right? So I really dedicated myself and gave myself to these clients within our business or whatnot, right? And in return, like I closed a lot of business. I was able to get the resources I needed to be able to do this next calling, right? And this next calling is enabling and empowering all of you to get out there and truly win in this business, right? And you're gonna do it. The only way you're gonna do it is if you have control of your pricing. And then to have control of the pricing, you got to have control of the margins. Okay, so that wraps up this piece. There's 2 avenues of revenue here, right? You got your compensation cap, so you got a raise. If you do $10 million already, and you're doing that business now, congratulations. Come over here, right? And you're not going to lose $200,000, right? I don't know how much loan officers think about how they look at how much money they made. Like, oh, I did $400,000 out of a great year. I don't know if they ever consider how much money the bank that they work for made off of them, right? Because it could be an equal amount, right? And that's something you got to consider, because at the end of the day, especially if you're bringing in the business yourself, doesn't cost that much. You shouldn't be paying them that much. I don't think anyway. But okay, let's move on to what it costs to be able to be part of this platform. Okay, there is a monthly fee. Okay, and this is hit up against your credit card or your debit card. It's $249 a month. This includes everything. The value is tremendous. If you went out and tried to get the stuff that we give you yourself, it would be somewhere around $800 to $1,000. What do I mean by that? Meridian Link LOS system. That's a web-based enterprise, just like Encompass. Salesforce CRM. Our Salesforce is very advanced, so you have a wonderful, magnificent CRM. We give you OSI flyers that's integrated into the Salesforce. We give you Ring Central, which is your own phone number or whatnot. So you have texting capabilities. It's all built into the Salesforce. We give you knowledge-based support. You can open tickets. I mean, we get a coaching program. We give you 2 weeks of the coaching program or whatnot. So as you can go to the website and start to look at everything, and I detail everything out in that other video as well, and the other discovery call part 1, if you will. So that was 45 minutes. And that's it. And you sort of see why we couldn't do both. We'd be talking for 2 hours about everything. So you can go through that one, look at that discovery call, and see everything that you get for that $249 a month. Okay, now let's get on to the other part. After you hit the 20,000, there is additional fee of $399 for the first 12 deals. This helps me take care of administrative stuff. Okay, so you still do pay a fee, $399. Once you get to deal number 13, it's only $99. Right? And again, what I've done essentially, so you guys understand, I've taken all the costs associated with manufacturing a mortgage. I looked at absolutely everything and I dropped it as low as I could. I need to cover this for this. I got to do audits. I got to do this. I got to do that. And I was able to analyze all of the costs and put together a structure where it's the expenses are controlled and very low to maximize the revenue for you guys. That's basically it. When you look at everything. So these fees are sort of like broken down to cover those individual things that enables me to give you back the lion's share of the margin that's coming to you. So these fees are like minimal. I mean, if you're not doing much business right now, it might seem sort of like impactful, like, working from, I get it. Working from zero, I remember, there was one point when I started this company. When I started the company, I had about $5,000, right? And that's all. And I bought some leads with half of it, right? And luckily, things worked out. But so I get that part of it. But if you're doing business, then when you do the math on all this stuff, it's an easy win for you. But even if you're not doing business, you still need to be in this position to be able to control your margin and kind of drop it down some, right? You've got to be able to do that. Okay. Let's talk about your downline too. Some people are going to look at this and understand that, wow, with this cap out, I can tell my friends, I can get a lot of people over here. Okay. We will help you grow your downline too. We get probably about 10 to 20 inquiries per day from loan officers that are interested in coming here. What we'll do is we'll set you up with some of those leads and put these people underneath your downline. So for $199 a month, we'll give you 2 people that do business. That's the other thing. We look at Modex, we look at their credentials, and we make sure they're good leads. We take them through all of this. And then sometimes they're like, can I talk to a loan officer that's already there? That's what they say, right? And we say, yeah, no problem. If we do that, that's considered a lead that we're giving to you as the loan officer. If that person ends up coming on, then they're going to go under your downline. Okay. So for $199 a month, you get 2 of those. $299 a month, you get 4. For $599 a month, in people that I talk to, like you guys, like I'm talking to you guys. If one of you guys were to come over, then I would put you under another LO's downline. I'm not going to put you under me myself. It doesn't affect you in any way, shape, or form, right? It doesn't matter who you go under. That doesn't affect your money. It doesn't affect the money you get back from the downline. It's just where you're placed in the overall structure. So at $599 a month, we're giving you a person. But this, think about this down the road. Don't pay too much attention. Don't worry about this too much right now. This is not a requirement. You see the $0. You come in at $0. You can still recruit people and put them under if you're just finding people yourself. This is just an add-on, if you will, right? So I don't want you to get too bogged down in this right now. Once you get in the company and you see, wow, there's a lot of value here, and you decide you want to commit to a downline, then you may do this. But don't get too bogged down with it now. Okay. Then let's kind of look at the last thing. Okay. Then there's the different statuses. Like if you recruit 10 people and they're hitting their minimum commission cap, the commission cap is $2 million. So $2 million at 1% is 20,000. So I say 20,000 a lot, but we also say 2 million at 1%. If you get 10 people in that are doing that business, then you're diamond. Okay. Diamond means that we're going to help you. We're going to use our resources to help you grow your downline. You'll get a dedicated recruitment concierge, right? And you'll get prioritized marketing support. So we'll start helping you grow a platform so that way you can increase your downline. Because this is really a business within a business. If you get enough people in here, you're going to have a residual income that's going to be amazing. Now, you got to really keep everything in perspective here. You really got to look at it, because somebody can make that statement at a different company, that same exact statement, it could be complete baloney. You know why? Because their rates are too high. Nobody's going to come over. You're just trying to sell a downline. You're just trying to sell the fact that, somebody can take a little bit of money from someone else. And that's why the MLM gets kind of weird a little bit. The difference with us is that the main thing that we're selling is the cap out. The cap out is extremely attractive. So that's why people are going to come over. The downline makes sense because of the cap out, right? Because of what it is that we're selling. So it's not going to be hard to get people in and convince them that, hey, this is a good platform for you to be at. Once you see that, you're going to say, hey, Ramon, I have these people that are interested, or I want to get some of those leads, but I don't have time to call these people. Can your team do it? And that's what this is. If you're diamond, we're going to help you. That means you've dedicated yourself to kind of growing the company. Platinum, gold, silver, those are all just different variations. You get a little bit less hours or whatnot, but nonetheless, these are all just from you getting other people into the company and us giving you resources to grow even more. Okay. All right. Yeah, that's it, guys.